Hello, everybody, and Leaving California World. Again, I'm David Barry. This is Leaving California Money Matters, episode 10. And, this is what, July 15th, I think, Terry. There's something that happened yesterday and 2 days ago in history. Where were you when President Trump got shot? I mean, this is crazy. And this is why you need to have resources like us in the Leaving California groups, and you need to have us give you the information. This is so important. Things are getting so serious, and what we like to do is, not complicate things too much. But where were you when the president got shot, Terry?
I was having coffee with friends. I didn't know about it until I was pulling in my driveway and a friend called me. So it was, praise God that he's okay, and that he will live on to serve our country again. So I'm very thankful for that. And it's a divine intervention, in my opinion. A clear sign that God wants him to lead our country again.
Monty and I were both at the convention for Ford, and man, we got great information. It was a great seminar, and that's what people like us do. We go to seminars to try to better educate ourselves so that we can better help our clients. But so Monty, where were you at? You were in the same room as me when it happened, right?
Yeah, I was. I found out about it at a break when we were finally done, and somebody told me about it. So yeah,
it's crazy. Sorry, guys. I didn't mean to get off on a tangent, but that's probably the biggest story of the week. Somebody tried to take out the top nomination for president. I mean, it's crazy. I hope that all of you guys are safe, and let's get on with the show. So, Monty, I guess besides the president getting shot, there was a lot of things that happened last week. So go ahead, let's dive in.
Yeah, absolutely. There was some good news last week. We saw the markets react in a positive way. What we've been hoping for, the consumer inflation cooled in June. The wholesale inflation actually surprised a little bit to the upside, but that consumer inflation really made a big difference. Plus, the Fed chair, Jerome Powell, acknowledged that elevated inflation isn't the only risk to our economy. So first thing we saw was that consumer inflation cooler than forecasted. It was a lot more encouraging news regarding that CPI, the Consumer Price Index. It fell 0.1% from May, and that marked the first monthly decline since the start of the pandemic and helped push that annual reading lower from 3.3% to 3.0%. So that core CPI, which strips out the volatile food and energy prices, it increased 0.1% for the month, while the annual reading declined from 3.4 to 3.3. So all of that measures and suggests that because those estimates were softer, well, the reality was softer than the estimates, that's really making a big difference in what we're seeing for interest rates. We saw an improvement last week. What we've got to remember is that the Fed hiked its benchmark Fed funds rate 11 times between March of 2022 and July of 2023 to a 2-decade high to fight inflation, which had peaked at 9.1% in 2022. So their goal with that series of hikes was to slow the borrowing and spending so that pricing pressure would shrink and inflation would come under control. So the Fed has repeatedly said that they don't plan to cut rates until members have gained great confidence that annual inflation is moving sustainably towards their 2% target. That's what they all hold to. So the Fed chair, Jerome Powell, he reiterated that sentiment again last Tuesday and Wednesday when they were having their semi-annual monetary policy report to Congress. And he said again, that is the full intention. We don't intend to cut rates until we have great confidence that we're moving that direction. So June CPI data followed better than expected numbers for both April and May, and that did give a welcome sign to the Fed that inflationary pressure is easing, especially after we got the first quarter readings that were a little bit higher than what we expected. So all in all, that was really good news for us to see. And I've even started hearing some rumors of it was so good that they're thinking, okay, maybe we can discuss a rate cut as early as September, which would be crazy.
Hey, Monty, on that note, now this is the same Fed that told us that inflation was transitory. Is that right? So these geniuses think that they've got a handle on it. I got to tell you, if they cut rates too soon, inflation is coming right back. Am I correct on that?
Yeah, we don't want to cut it too soon. The thing is, you got to think about it like a car driving on a long road trip. And the way the Fed makes the decision about what they need to do as far as the speed limit that they're driving at currently is by looking in the rearview mirror and seeing how fast have we driven on average over the last 12 miles, let's say. Over the last 12 months, how fast have we been driving? So they're not looking at the brick wall that's ahead of them in 1 mile. They're just saying, on average, what do we need to be driving at to get back down to that 20 miles an hour mark, let's say. And so, yes, you don't want to change it too fast, but you also have to realize that they're making decisions with old data on an average. And so at some point, that brick wall is coming and it's going to get hit before you get to the average to slow down and stop.
Wow.
Is it also fair to say that the Fed raising interest rates to slow inflation is more like taking a cruise ship and trying to use a paddle to turn it, as opposed to the actual reasons, the underlying reasons that we have inflation, which is way too much government spending, way too much monetary easing, which I know a lot of people don't know what that means, but can you kind of dive into that a little bit and tell us why the Fed is not necessarily the best way to cool inflation?
Yeah, I'm not clear about that. I want to talk about the things that we do know and make sure that, again, we reiterate, we get this data. This is not our opinion. This is truly coming out every week. And so we're able to validate what we're talking about. But the Fed has a dual mandate. We talk about that a lot of times: maximum employment and keeping that inflation where it needs to be. So the Fed is charged with keeping our country employed and keeping our inflation, our economy, where it needs to be. It is a paddle in a cruise ship, yes, but it's the way that it's set up. So I definitely think there's better ways to look at it. And you're right, the monetary policy is it's crazy, very, very complicated, and the Fed is doing their best. I know I probably don't seem like I'm a huge proponent of the Fed and the job they're doing at the moment, because we do believe it's time to make some changes before we hit that brick wall. But they are doing their best with the data they've been given to steer that Fed funds rate, which then does in fact impact the 10-year Treasury and the mortgage-backed securities. And that's what the general public then sees. We get to the part where the general public sees, what can I buy a house for? What is my option as far as where rates are going at the moment?
You know, it's funny. I couldn't have said it better. I mean, you are such an expert on this stuff, and we're so blessed and lucky to have you. But in layman's terms, and for our members of Leaving California, and for people that are thinking about leaving, what does this all mean? And what kind of advice can you give to our members that are either leaving, or maybe they're even in a new community and they're thinking about buying a house? So let's talk about leaving and selling your house and maybe going to a new city. What does all this data mean?
Yeah. Well, what it means is you still have the same charge you've always had to find a house that's affordable to you. And that is still very possible because the houses are there. We've been talking about that. We've got different realtors in different markets. You know, take Las Vegas, for example, where David and I just were. That's where David specializes in real estate. There's still affordable houses. You still can get that. And you can also have an affordable payment, really. It may be a little higher than what you wanted, but it's still affordable, and we can show you that together. The Fed has that dual mandate of the price stability and the maximum employment. Recently, what they've focused more on, what we've talked about a lot in these 10 episodes, is taming that out of control inflation. The labor market's been pretty strong. What was interesting is Jerome Powell this past week acknowledged that elevated inflation is the only risk. The job market has also cooled considerably. So we're seeing the changes there. All of this, though, David, means that things are going the right direction. We have seen that Titanic start to move and start to point back in a beautiful tropical destination. You want to get on this ship before the ship is full. To use Terry's analogy here, at some point that cruise ship is going to be full of people, and it's not going to be as comfortable to go find yourself a room on that cruise ship. Find a room now while the destination is still out on the horizon and before it's right there where everybody's saying, I want to jump on now and I want to find an available room. Well, there aren't available rooms. So now there's a bidding war on how much will you give me for this room here, which doesn't even have a seaside view. It's got a inside the ship view.
Well, Monty, I have to say that it was so impressive, but there's two things I want to say. First off, Terry Gilliam, our founder, what an amazing job he did of putting together 350 premier realtors throughout the country.
Right.
One of the things that I was most impressed about with you, Monty, when I met you is your connection ability. You don't get to be in the top 1% of lenders nationwide by not knowing anybody. So it was crazy because Terry and I were having these conversations about our Leaving California Southern Freedom Tour. And we were talking about cities, and you're like, oh yeah, I know this guy. And every city, Monty knew somebody. So I want to get off track a little bit, and we're going to talk a little bit about realtors, because part of this ship and getting on the Titanic before it sinks and being on a newer ship, you've got to have a realtor. And Terry, I think you wanted to bring up something about realtors as well. So what did you have, Terry?
I just wanted to talk. I get questions a lot about the National Association of Realtor litigation that occurred last summer. I think it went over a year's period of time, where home sellers in Missouri were suing the National Association of Realtors and also some of the franchises, Keller Williams and others, because they thought that the homeowner should not be paying the commission of the agent who brings a buyer to their home, who buys the home. They thought that was an inequality that needed to be remedied. So after a lot of litigation, a class action lawsuit was commenced, and it was decided, a National Association of Realtors decided to settle for a close to $500 million, I think, and I think it was accepted. But what that meant is that home sellers no longer are required, and they weren't required in the past, it's always been negotiable. Homeowners no longer are expected to necessarily pay a commission to the agent who brings a buyer. Now, everybody's good. Boy, we just saved a ton of money. Well, guess what? Somebody's going to have to pay for that realtor's time who brings a buyer. It's either going to be the buyer who has to pony up and pay a commission to that realtor who helped them find a home, or it's going to be the home seller. Now, what does that mean in layman's term, or in real terms? What that means is that MLSs can no longer publish the commission on the buyer side. Whoever brings a buyer, the MLS can no longer publish that to make it known to the realtor what they will make if they bring a buyer. With that being said, those agents, if I'm a real estate agent, I've got to make a living, right? If I've got buyers, I've got to be able to make a living. So I'm going to the buyer now and saying, okay, buyer, somebody's got to pay me. It's either going to be the home seller's going to pay me or you're going to pay me. Now, how does that play out? So in the real world, what happens is let's say someone's leaving California, coming here to Central Florida. They're going to call the realtor who's in our group, and they're going to say, hey, I went on Zillow, I found 7 homes I want to look at. Do you know what that realtor has to do now? Because there's no MLS commission shown for that realtor, she has to call every one of those listing agents and say, is your home seller willing to pay a commission, or do I have to get the commission from the buyer for each home?
Yeah.
So let's say that that you've got four of the 7 homes, the home seller's not willing to pay commission. You know what that realtor has to do? Okay, Mr. Home Buyer, here's the 7 homes you want to see. These 4, if you buy one of those, you've got to pay me. The other 3, the home seller's willing to pay a commission to me and you don't have to pay. Who do you think they're going to go see? They're going to go see the homes where the home seller pays the commission. So all of this bureaucratic policy that has generated all of this paperwork, hundreds of millions of dollars of payouts, I want to talk about that too, has created all of this bureaucracy now that has to be done when it comes to just buying a home that was really kind of being handled before anyway. I can assure you, 5 years from now, most home sellers want their home shown and they'll pay the commission. But we went through all of this litigation and all this other stuff. And let me just address that. I saw recently there were millions of people who sold homes in Missouri, that's where the lawsuit was, who were part of the class action lawsuit.
Wait, hold on, Terry. Before you go there, I wanna just set that up a little bit better because I was pretty upset about it. I know Monty's gonna give his take, but the thing is all of these homeowners, and I actually heard that a lot of them were actually happy. They just accidentally got into the lawsuit. But how much money did each one of these guys get for and they're thinking, oh my God, I hit payday. How much money are they gonna end up getting?
Well, of the almost $500 million in settlement, if all of them decide to make a claim, the average payout is going to be $13 per homeowner. Let's say it's $20. Yeah, you paid $5,000, $10,000 in commission to the buyer's side, but you're getting $20. Oh, how much are the attorneys getting? Anybody want to know? What I heard, almost $100 million for 2 years of work. I also heard they were billing at $1,200 an hour for expenses. $1,200 an hour. That's good work if you can get it.
Monty, I want to hear your take on this. I mean, it really is ridiculous. And all of these people that thought that they were going to get, hundreds of thousands of dollars, getting $20 now, have completely broke the system. And the system was working fine. There were very few people the way I understood it, that were really unhappy. And by the way, if we're talking about realtors, let's be real. There's a lot of bad realtors and there's a lot of great realtors. And the great news is we don't work with the bad ones. So Monty, what's your take on this? And maybe you could expand a little bit on what Terry said.
Yeah, for sure. It was not broken. I agree. The buyer was always paying their agent because it was always in the price. There's no way a seller was taking a price and paying a buyer's agent commission without them knowing it. So the lawsuit is focused on the buyers needed to be paying the buyer's agent, sellers needed to be paying the seller's agent. But really, if you think about it, if the offer was $500,000 and that meant that $30,000 was paid out in commissions, $15,000 at 3% to the listing agent and $15,000 to the buyer's agent, then that meant that seller was netting $470,000. They knew that. And so if that same house is up for sale now, they're either going to list it at $485, knowing they're only paying their agent and the buyer can pay their agent, or the buyer can now offer, in theory here, $500,000 and the seller will be happy to pay it. The wisest thing to do, to reiterate what Terry said, is to list it at $500 and say you will pay the buyer's agent, so that all the buyers who are represented by agents who are compliant and have a buyer's rep sign saying you have to pay me, if the seller doesn't pay me, will still show the house. So that's always been the way it was done. It will continue to be the way it's done from a buyer's perspective. Now, shift to the realtors. To your point, David, there's a lot of bad realtors out there, a lot of them. And this lawsuit is awesome to get rid of them. There are so many that I have talked to that are getting out of the business. And when I mean I've talked to them, I mean I've run into them at an event or something like that, and they've shared with me, yeah, I did 2 transactions last year, but I'm not going to be able to continue because of the settlement. I can't sit down with the buyer and explain why they should have to sign a buyer rep. So that's actually really good. You don't want an agent that does 2 transactions a year to represent you on a $500,000 purchase. That's not who you want. You want an expert. You want somebody who knows their stuff. And so I do believe there's good that's coming from this, and it's going to wash out a lot of agents who can't demonstrate their value. And it's going to help the great agents still be able to say, these are the things I do for you. Would that be helpful for you? Or would you like to do all of those things yourself as the buyer? Yes, you can be unrepresented, but if you do, these are the kinds of things you'll need to do. You'll need to write the contract. You'll need to negotiate repairs. You'll need to look at the appraisal. You'll need to do all these things, which you don't have any training to do, and there's real money on the line. So I think both of you gentlemen are spot on in your assessments.
And Terry, did we miss anything? Was there anything else? I know we've gone a little bit over on time, but wow, the news is flying at us, right? There's so many things that are going on in the news, and we want to keep you guys informed because I think education is key. And by the way, speaking of education, at the seminar, one of the things they said is it's not really so much about how much someone knows, but it's about how much they can do and what is their proof. So when you're talking to a realtor, you need to find out, most people, Monty, are going to go do their research and they're going to see, does this guy sell homes or does he just say that he kind of does it once in a while? But anyway, sorry, I didn't mean to get off on a tangent, but we came back from an amazing seminar. Terry, did I miss anything?
Just know that anytime there's a lawsuit, the only people who really ultimately win are the attorneys.
Always, always, always. And Monty, did you have anything else? Any other reports or stats or any new programs that are out there that people might be interested in? Go ahead.
Yeah. A couple of things. One is the general public really can't tell if a realtor is doing business or not. I'll take my brother as an example. He called me over the weekend, was looking to make a move to another city, and asked me to look up 2 realtors because I can see all their production. I can pull it up and I can see it. And so one of them had production, one of them had none, but they look the same on Instagram. They look the same on Facebook. And so you can't really tell who's doing stuff unless you have a system like we have to be able to see what's really going on. So I don't want somebody to just make a decision on, hey, how do they look on social media? That's not really a good decision-making factor. So I'm always happy to help people know who's the best agent, who's somebody who's really successful in that area. As far as what's coming up this week, we do get some housing reports coming out tomorrow. There's going to be an update on builder confidence for the month. So that'll be interesting to see. And then later in the week, we're going to get the jobless claims. We'll see more on the labor market. What does that look like? Right now, we're in a good spot as far as rates are moving back to a place they haven't been in 5 months. So that's great. That's exciting. And I'm looking forward to the fall. I think there's going to be a lot of opportunities for the people that step out and make a decision to go for it.
Got it.
Hey, let me add one more thing. So with the event that happened over the weekend, there's no crystal ball, but it's certainly more likely that Donald Trump will be elected president in the next election. With that being said, I believe that he will be more fiscally responsible with the economy, and the economy will boom better because he's not all about raising taxes. Right now, if you re-elect Biden, your taxes are going up. At least if you pay taxes, they're going up. Trump has said that he's going to make permanent the tax cuts that he implemented when he was in office before. What that means is that rates should get better. Inflation should come down. Rates should get better. When rates come down, more buyers come into the market. I think you said, what is it? For every point or half point, you get 500,000 new buyers, Monty, is that right?
1% drop in rates is 5 million new home buyers across the nation. 5 million.
So we go from whatever it is now, 7% down to 6%. You're going to add 5 million more buyers into the market. Now is the time in the summer of 2024 to be looking to make your next purchase. Even if it's a second home, an investment home, if you're looking to move in the next couple of years, buy it now and then refinance when rates drop. You've got a house that's going to do nothing but go up in value. I don't see any reason why houses aren't going to continue to appreciate. There is such a housing shortage in the country right now, and I don't see that slowing down anytime soon, except there may be a housing bubble in California because I believe people are still going to continue to leave, and eventually that's going to equalize, and there's going to be too many houses in California because it's emptied out. But that's just my opinion.
So we haven't really asked for much, and this is our 10th episode, so I think it's fair to ask. So to all of our members out there that watch our show every week, I'm going to ask you for something. And what I want to ask you for is I want to ask you to contact us. Contact us and at least talk to Monty. At least give him a chance to talk to you and explain to you how his lending group can help you with your new purchase. Talk to one of our premier realtors. I'm asking you to call us and allow us to explain what we do and how we help people relocate. You don't have to choose us, and it may not be a fit. But since we're giving every week, week after week, we spend a lot of time preparing for this show, and we give out this information from the kindness of our heart. So please allow us to have that conversation with you. If you're moving to Southern Nevada, please look me up. If you're moving anywhere in the whole United States, look up Monty's team, and he can really help you.
And we'll put Monty's contact information and David's contact information in the comments. Also, we will post a link to our leavingca.info page so that you can look up our 350 realtors. So if you want to sell your California home and or buy a home out of state, you can connect with those folks too.
So thank you. And by the way, of course, we want you to like, comment, and share. And if you know somebody that hadn't had a chance to watch our show, please share it with them so that they can get this information, because this information is important. And Terry, like I started off the podcast today, I mean, what's going to happen next? My goodness. I don't even want to think about it. All right, guys, I hope everybody has a great week. And thank you, guys. I know we went a little over. I hope this information helps you and helps you get out of California. And welcome to America. I'll talk to you soon. My name's David Barry. Have a great day. Bye-bye.